I thought we agreed during the break we'd stop saying the B word, David, but we can't.
Dude. Bull or bear?
True. Not bull, not bear, but bankless. Hey, Bankless Nation, happy second week of March. David, what time is it?
Oh, it's the Friday Bankless Weekly Roll-Up time where we cover the entire week in crypto. This week, not actually as crazy as all the other weeks. There are some very big headlines and not too much more other than that. So definitely a week of some big news headlines, but a few just concentrated news this week. Concentrated news.
This one's coming at you one day early. We've got some things scheduled, so we're getting this to you a day early. So I guess maybe that's our treat. But some topics of the week for you. Number one, the Biden executive order for crypto just came down the pipeline. This is much anticipated. Yeah, I mean, there was a ton of FUD about this, and we're going to answer the question whether this is actually bearish for crypto, as many anticipated, or is it bullish? We'll talk about that.
The question, Ryan, was oof, question mark.
Yes, exactly. Exactly, and it's still a question mark. That's why you have to tune into the episode. Also, commodity prices. We got to talk about that. We talked a little bit about that earlier in the week, but getting crazy out there, maybe threatening a global recession. That's happening. Update on sanction week. More sanctions. People freezing everyone's bank account. Coinbase, the exchange. We'll talk about what they're doing in the sanctions world. Also, MetaMask and Infura. Are they sanctioning people too? What's going on there? David, you got the last one. There's some things going on in the NFT space. How would you characterize those things?
Oh, I would definitely characterize them as complete shenanigans, Ryan. Not just one shenanigan story, but multiple NFT shenanigan stories. So definitely deserves an oof there as well.
NFT shenanigans. Guys, before we dig in, we want to tell you a bit about our friends at OPOLIS. Okay, they sponsored this message. They wanted us to tell you about what they are doing for the self-sovereign worker. And this is for US listeners primarily, because for US listeners, it's very difficult to get health insurance if you're not working for a large corporation. Like, how do you do it? If you want to work for a DAO, if you want to work for yourself, if you want to work for a community, how do you actually get health insurance? Well, you can get that through OPOLIS. They offer health insurance and other payroll benefits to the self-sovereign worker. This is the 21st century worker, the worker who's working for a set of DAOs, working for themselves, is somewhat independent. They also provide the ability to get paid in crypto. They take care of all the pay stubs, all the paperwork, all the W-2 sorts of things so that you don't have to. It's a really awesome tool, and I think is going to empower a whole new generation of DAO workers and crypto workers and ultimately get more people onboarded to Web3. And there's also a bonus. Tell them about that bonus, David, if they sign up for OPOLIS now.
Yeah, if you sign up for OPOLIS and go through the onboarding process, you can get 1,000 work tokens and 1,000 bank tokens, so long as you do that before May 1st, which is a couple months away, but it's going to come fast. So go ahead and click that link in the show notes to get your bank and work tokens. Work tokens being the tokens of OPOLIS, which is a DAO.
Awesome. DAOs helping DAOs. That's what we're doing here.
We like it.
Is Bitcoin helping us? Let's switch to markets, David. Bitcoin helping us?
Confused market. I think I would call it a confused market this week. Started the week at $44,000 Bitcoin price, hit a low of below 38,000, but has since climbed back up to just above 42,000 to where it is right now at $42,200. Overall down 5-ish% on the week. Yeah.
This is hopeful though. This little spike. Is that a spike on the Biden news?
But I mean, you want to zoom out though, Ryan, and see what it looks like?
No? Okay, fine. If you make me 30 days.
Yeah, do the 180 days.
90 days, 180. Okay.
Yeah. Okay.
We're headed down. Okay.
All right.
But look at this line. Let's go to 24 hours.
Line. All right.
Look at this. Okay. It looks like we're actually up. Here's a report from CNBC. 8%, Bitcoin up 8% as Biden announces executive order on cryptocurrencies. We're going to talk in depth about that when we get to the news section, but it seems like the market is interpreting that as not bearish news. Anyway.
Yeah.
And positive news.
All right.
It's a silver lining.
Yeah, well, we're gonna have to unpack that. There's definitely some optimism to be had about this executive order.
You know what? I could tell, David, you're feeling bearish, aren't you?
Yeah, I'm
in
a
the
bear
bear
this
mood?
week. I'm in bear mood.
You're
Yeah.
never in a bear mood. What happened? What changed?
We'll get to the commodity section. Ether started the week at $3,000, hit a low of $2,450, and is currently at $2,720, down about 8% on the week.
ETH down 8% on the week. Chris Berninsky, I saw, had a take on that, but that's actually to do with the ratio. Let's talk about the ratio first. The ETH to Bitcoin ratio. That's down on the week too. What's happening here?
Yeah, we broke down below 0.065. We are at 0.0644. I think we were at 0.067 last week. So the ETH BTC ratio took a big hit, down 3%. The Bitcoin news, the executive order out of Biden has where Bitcoin jumped 8%. Ether didn't follow suit. So Bitcoin responded more than the rest of the crypto market on the executive order news, which is interesting.
So Bitcoin up more than ETH. We're back to where we were in February, which was sort of a local low.
We're below where we were in February.
We're now below where we were in February. Wow, we're going back to where we were in
October, yeah.
And this bodes interesting things. I think we've said on Bankless before, when ETH Bitcoin ratio is going up, that means secular bull market.
That means
generally.
risk on.
Risk on. This is what Chris Berninsky says as well. Why don't you read out this tweet, David?
Yeah, Chris says, bulls are celebrating Bitcoin ripping on the executive order news. Meanwhile, while the ETH BTC ratio, which is a proxy for risk appetite in crypto, grinds lower. So this is mixed signals, right? BTC up on the executive order news, but ETH BTC, which, as we've said before, is kind of a bull market indicator, is hitting new lows that we haven't seen since October, which is one of the many things that has caused me to not have my bull hat on this week.
Okay, well, I get to be a bit more bullish than David Hoffman this week.
Okay.
So I know Chris has been bearish
Yes.
the last few weeks and months, I would say. And I do agree with this ETH Bitcoin ratio being a proxy for risk appetite in crypto. But doesn't Bitcoin generally have to go up first when we're breaking out of these bear market patterns? Like, generally, that's been the pattern. Bitcoin has a breakout. Everyone's like, okay, is it safe? Is it safe? Weeks go by, sometimes months go by. And then other assets follow suit. ETH generally next in kind of the classic cycle that we've seen again and again. Could that be what's happening here, David?
That's definitely been the meme historically, but I don't think we've seen that been a thing for the past 6 months or so. I think a lot of just we are in uncharted waters, and I think we have been for a while now. Crypto is in a place both in its development and in its global relevancy and in the regulation spotlight, both very good and very bad, and just a lot of neutral stuff that is relevant to the crypto markets that really just changes, I think, all of our previous models and patterns. First we would have Bitcoin season, then we would have ETH season, then we would have altcoin season. When's the last time that happened, Brian? I think it was over a year ago.
I would say the last time that probably happened was a year ago. It kind of started, and we had a good, after DeFi summer, we had a nice, strong Bitcoin rally, price rally. Right. And then we cycled into ETH. And then it kind of skipped DeFi. And
then we got to the alt L1s.
Yeah, straight to alt L1s. And then that trailed off, and now here we are. But you think it's different. And I think probably the reason you think that is maybe because of the macro conditions, which we'll get to in a few minutes with the commodity prices. But before we do, Bankless BED Index, that's a third, Bitcoin, ETH, and DeFi. What are we looking at on the week?
It's about flat on the week. Started the week at about $100, currently at $99, so flat.
Flat on the week. A way to get out some of that volatility from holding one of those asset classes individually. All right, let's get to a few other things on the bear market watch.
Bear watch.
This is the second worst start of the year for U.S. equities in 123 years. That's the tweet. Good place to start the bear watch is in the equities market. We generally don't talk about equities, but look at this. For context, the negative 11.9% drop in the first 44 trading days in 2022, that's what we've seen, is only rivaled by the 1920 Great Depression and the Great Financial Crisis. Those are the only two times something like this has happened in 2009, of course, when we had the financial crisis, and in 1920, when there was the 1920 Great Depression. Oh,
right there.
Yeah. Okay, right here. 11.8%.
We beat it by 0.1%.
Yeah, but then we got the Roaring Twenties, David.
Yeah,
this is 1920.
Yeah, so like it's a little bit like one half bear watch, but also it's like, all right, did we already express all of the bear? Is the bear already expressed? I don't know. Maybe, perhaps. I mean, it's a little bit of just like a timing thing, right? Like we hit the highs in the stock market right at like December, January. And then Putin invaded, amassed his army. We did a normal correction. Then a war happened. So like there's a little bit of just like timing bias on this one. But still, at the end of the day, down 12% is a big deal.
Bad start to the year for all assets, including equities, including crypto, of course. This is the headline title from the Financial Times. War in Ukraine sparks a commodity crisis. So let's dig into that. Let's dig into the commodity crisis a little bit more. Here is prices of various commodities. And I'm looking at the 1 year here. Is that the thing to look at?
Yeah, I think. Well, I mean, it just shows that spike at the end of the year so clearly. Where like in April of 2021, we had $60 a barrel for oil, and we are currently up above $120 a barrel. So like oil has doubled in the last like 6 months. And we don't have this tweet ready, but Jim Bianco made a tweet where like every time that there's been a 50% increase in crude oil has triggered a recession. Like the hit rate is 100%. According to Jim Bianco, and like you can also see this in other commodities too, like gold, which I mean I guess isn't really necessary for production, but still is an indication of just kind of people being spooked out of equities and fiat and other currencies. Like gold is surging past $2,000. Zoom out to like the 5 year on that one, Ryan.
Here's the 5 year on gold.
Yeah, almost setting new highs basically.
We're back to COVID. Remember when it did a big run during kind of early COVID days?
Right. Yeah, and then Bitcoin sucked all the air out of its sales. And then of course corn and wheat are up bigly as well. Corn and wheat setting basically new highs again. Yeah. And like that really matters because that's food prices, right? Corn and wheat is food prices, and it's not just like food prices going up like 20 to 25% at home, which is probably what it could happen if these prices sustain their higher levels. But it also means just like perhaps famine for Africa, because apparently some economists are saying like, so much of the African continent is dependent on Russia and Ukraine for wheat that they are going to have to rethink where they're getting their wheat from, because there's absolutely zero way that a cycle's worth of crops is coming out of Ukraine right now.
And specifically wheat, because Ukraine produces a massive amount of wheat for the world.
Mm-hmm. Yeah.
So commodity prices are jumping. This is a commodity indice from the Dow Jones as well. And I think we can see that if I can pull up the
Get that graph
here.
to load, yeah. Mm-hmm. I guess the graph, there it is.
Yeah.
So these are all commodities, right? And we're going all the way back from April 2021, but even with the 5 year, you can just see the commodities going from where it was like 500. This is an index, so these numbers are arbitrary. 500 where it was at in July of 2017 to where it is now at 1,260. So like think when commodities go up in price over a doubling over that 4 or 5 year period. So like 4 or 5 year period, that's a very large time in crypto terms, but in commodity terms, in manufacturing terms, in production and food and just the cost to produce things, the commodities of the world have like over doubled in a 4 year period. So like how many businesses are no longer viable because the cost of goods are higher? And so much of this run has come up in the last like 3 months. And so like if these high commodity prices stay sustained for a long amount of time, it can cause significant disruption in so many businesses that need to consume commodities to produce their products. So this is part of like bear mode David right now.
And some of these niche commodities as well, like things like neon gas, which is an ingredient for semiconductors, like price on neon gas
in everything.
Right? Including your coffee cup.
Yeah, including my coffee cup.
and fertilizer for crops. Apparently, that's a product that Belarus has a commodity ingredient,
which is now
inside as
sanctioned.
well.
A country that's now sanctioned, so we can't buy that anymore.
Palladium. That's a key commodity for cars, I believe, and other manufactured goods like that. So it's just like a ton of different commodities, and we've never seen crypto during this sort of a macro backdrop. So is this what's giving you the bear market vibes?
This is a very big part of it, and I think the story really hangs on how much of this are traders just speculating that commodities are the trade right now and like forcing commodities up, and how much of this is actually going to be sustained broken supply chains, Eastern Europe disruption, cascading contagion domino effects across the globe, or is this just a blip? Like, are we going to return to more like normal levels in a couple weeks? Or is this actually going to cause significant disruption? Because like if commodity prices are high right now, like when lumber spiked, a lot of like at the beginning of COVID, when lumber spiked, like construction was just like paused and people waited for it to come back down. And then people just resumed business as normal as soon as just like the markets cleared. If it hadn't spiked, however, that would have caused significant disruption in construction. And so that's basically what I'm looking at right now is like, is this a spike? Is this just financial markets being financial markets? Or is these high commodity prices going to be sustained? And remember, at the end of the day, while there is a big difference between currency inflation and commodity price asset valuation increases, for the average consumer, it doesn't really matter because it still makes your milk more expensive, or it still makes your construction more expensive, or driving your car more expensive. How many individuals can stomach like a 10 to 15% increase of the goods that they consume on a monthly basis? Like it starts to like raise the threshold line as to like what is viable in the world.
Do you remember that episode we did with Lynn Alden? I think that was like during the summer, and we're like, Lynn, what should people hold during the 2020s? Because it's going to be a chaotic decade. And she was like, you should hold commodities, like hold commodities.
She did say that.
Very interesting that's what's kind of coming through. When fiat is unstable, when there's uncertainty in the world, commodity prices just shoot up. Not necessarily crypto commodities though.
Right.
ETH and Bitcoin as commodities, but
consumable
they're digital
commodities. Yeah.
You can't, fill up your stomach on ETH gas, right? So it's a different type of commodity class that is not following suit here, but we'll get more into that a little bit later. And I think the commodities story is something that we'll be talking about a lot over the next weeks to come, probably on the roll-ups as well. But we put out an episode with Kyla Scanlon on Fortress Russia and commodity prices as well, including the R word recession we talked about. So go check that out. It was published earlier in the week. We'll include a link in the show notes as well. Just a good episode to get a recap on everything that's going on in the world. Something that is down as far as commodity price though is Ether block space. Okay, Ether gas fees dropped to a 6-month low. The decrease is likely related to a cooling off of the NFT market, is the subtitle here. I've definitely noticed GUI prices down here lately. Is that some solace to you, David? Bear market David?
I mean, no. Like when Ethereum block space demand is low, that's an indication of the bull market. It's not, I wouldn't say it's a predictive indication, it's a lagging indicator, but it's just like another signal that like things are just quiet in crypto land. And as we know, like, Kobe put out that article a while ago that was like, basically everything in crypto hangs on attention, right? Like things only go up when people have attention on them. And what I'm seeing is that the crypto industry has less and less like attention on it, other than the regulators, which isn't like the best kind of attention that you want. NFT attention going away is bad because that was what sustained a lot of the bull market. And that's actually kind of the graph that we have up next is like, we all know that the NFT search terms on Google just like went gangbusters during NFT summer. But like, how long can it be sustained? And right now we're back down to roughly September 2021 levels of NFT search volume. So over 6 months ago, I think. So much of that block space demand for Ethereum and for other chains came from NFTs, and people are starting to care less and less and less about NFTs.
Does this little graphic here in the search bar, does this remind you of 2017 at all? ICOs?
It reminds me exactly like 2017, dude.
I'm just feeding into the bear market David this week. I'm less worried than David for bankless listeners, but I do think that this could mark a turning point as well. I guess we'll just have to see. But you know what's if you don't laugh, you're gonna cry. This is the gas price I saw. This is a screenshot from somewhere outside of LA, and we're talking like $7 a gallon in the US for gas. God damn. And contrast that with Gwei fees, right? So like so real life gas up, yeah, but ETH gas price down. That's the world that we're living in right now. I don't know. Give us a case to be hopeful though. What do you think? What's something that gives you some bull market vibes?
Well, it's one of those. Maybe if somebody of your preferred podcast is bearish, maybe that means that the bear things have already happened. And so there was a line that I heard, I can't remember where it was said, but like people, it was actually in Ray Dalio's book, which Ryan got me on, where like people will keep on buying Amazon stock at every single price level because it went up so much. Therefore, it's clearly a good buy, forgetting that like when you're buying it at the top, it's not a good buy, it's an expensive buy. And so perhaps this is just like the inversion of that. Like if so much of this bearish has already happened, maybe that means all these stuff is cheap and the bearishness has already manifested. However, the whole contagion crypto, the commodity contagion thing still looms in the back of my head. Like we really need that to not trigger a bunch of other breakdowns in other parts of the world.
I do think it's funny that the only thing that really concerns me, at least in the short run in crypto, in the short to medium run, let's say in crypto, is macro events. Mm-hmm. Like the fundamentals of everything else are just like so strong.
Always happen.
I mean, the ETH merge this year, right? Mm-hmm. Like that's a massive catalyst. How can it not be? And yet, if that happens while we're still in the slumps of a bear market, maybe. I mean, when you have good news during a bear market, it just like doesn't move price. And that's an indicator of the bear market. So I think in the next, 3 to 6 months, we'll actually see what type of market we're in for real, including when the merge happens and when that ships, what happens to the price of crypto? Will that be a positive catalyst or will it just like fall flat? Because that's a massive fundamental event that hasn't been priced in. But maybe it won't get priced in if we're in the backdrop of all of these macro events. We will have to see.
I think that's exactly right. And if you believe the Bitcoiners that about like how the 4-year crypto cycles that we've historically had are all triggered by the halvening events, typically the halvening happens during a bear market and only Bitcoiners would care. They're like, oh, halvening, yay. But then the mainstream media is like, we don't really care about that. But then because of the supply issuance reduction coming out of Bitcoin would get halved, there would be miners selling less Bitcoin on the secondary markets. And then slowly Bitcoin would start to creep up and it would creep up for like a year straight. And then people would realize it and then they would turn into a bull market. And so like, if you believe that the supply halvenings out of Bitcoin triggered bull markets anywhere between like 12 to 24 months later, you would definitely expect that same thing to happen to Ethereum during the merge because it's 3 halvenings all at once. And so like maybe a viable path forward is that like we are in a bear market as bear market David says that we are. And then the merge happens and the mainstream media just doesn't care about Ethereum. They forgot about crypto. No one's paying attention. It's quiet. And so the merge happens. We get a small little blip in price, but nothing really happens. But then for the next like 12 to 18 months, ETH just slowly just grinds up and grinds up and grinds up because of the supply issuance reduction. Like this is something, these are patterns that we've seen before that I could totally see playing out.
If we are in the bear market though, like let's say this repeats similar, like a fractal of 2018 and 2019, there's some like periods where things stay steady. And then there's like a series of drops.
Yes.
You get a 50% drop. And you're like, okay, that was it. That was the 50. And then you get another 50% drop, right? And you're like, oh my God, okay, that was it. And then you get another 50% drop.
That's one of the things that's got me into bear market mode. It's just like every time these crypto prices come up to an inflection point, it always goes down. Like you can predict it. It's like, well, if we're in a bear market, it's going to go down. And then it goes down.
Yeah. I think it's a different orientation, certainly looking at how to invest during the bear market. But I mean, the thing that remains true is like, don't sell when the market is panicking, right?
Right.
That's the absolute worst time to sell. And so you can either hold through these types of things, you can have some dry powder on reserve to buy aggressively the dips that could happen, or this could be sort of a fake out of some sort. And we're not repeating 2018, 2019, given the strong fundamentals. So impossible to tell. But I've noticed that the super cycle believers have been quiet recently.
Well, the thing is, like, I bet you if we like zoom to all-time highs in like 3 to 4 months, people will be like,
They'll be
"Oh,
loud
super
again."
cycle."
It's like narrative follows price, guys. All right, not the other way around.
That's exactly
Anyway,
right.
we got a lot more to talk about. We're going to cover the releases. We're going to hit the news of the week, including that Biden executive order. But before we do, we want to thank the sponsors that made this episode possible.
Bankless is proud to be sponsored by Uniswap. Uniswap is a new paradigm in asset exchange infrastructure. Instead of a cumbersome order book system where trades are matched with other humans, Uniswap is an autonomous piece of software on Ethereum that lets you trade any token at the current market price. No human counterparties or centralized intermediaries, just autonomous code on Ethereum. Input the token you want to sell and receive the token you want to buy. The Uniswap Grants program is accepting applications for grants. Do you have something of value that you think you want to contribute to the Uniswap ecosystem? No matter how big or small your idea is, you can apply for a unique grant at uniswapgrant.org and help steer Uniswap in the direction that you think it should go. Thank you, Uniswap, for sponsoring Bankless. SLINGSHOT is a decentralized trading platform that combines the performance and ease of a centralized exchange with the openness and transparency of DeFi. SLINGSHOT aggregates liquidity from all of DeFi in order to find the best price on thousands of crypto assets. Every token on SLINGSHOT comes with a price chart and trade logs to give you insights into the market's activity in real time. SLINGSHOT is available on Polygon, Arbitrum, and Optimism, saving you from the high gas fees and low transaction speeds of the Ethereum L1. There are no fees to trade on SLINGSHOT, and any positive slippage is given to the users. Trading on SLINGSHOT is a social experience. You can even set your chat avatar to your favorite NFT, or soon a Slingshot 2099 NFT avatar. Once you bridge your assets to Polygon, Arbitrum, or Optimism, go to app.slingshot.finance to trade and use the chat box to share your trades with others and find other tokens to ape into. When you shop for plane tickets, you probably use Kayak, Expedia, or Google to compare ticket prices. So why would you limit yourself to just one exchange when you trade crypto? When you make your trades, you want to make sure you're getting the best possible price on your trade, and that's why you should be using MATCHA. MATCHA has smart order routing that splits your trade across all the various liquidity sources in Ethereum, and is also operational on Polygon, Avalanche, Binance Smart Chain, and other chains. Trading on MATCHA is super easy because it pools the liquidity for me in a single, easy-to-use platform and allows me to make limit on-chain orders, so you can set and forget your DeFi trades, and they will go through automatically while you're away. So when you're making a trade, head over to matcha.xyz/bankless and connect your wallet to start getting the best prices and most liquidity when you trade your crypto assets.
Hey guys, we are back with the news of the week. Now we got the bearishness out of the way. Let's talk about what's getting released. I said news of the week, but first we got to cover what's getting released. StarkNet, that's some good news this year. Okay, Layer 2 is coming. Layer 2 is here. This is a StarkNet-ecosystem.com website. Look at all these projects on StarkNet, or either live or on the roadmap in beta version of some sort. Alpha Road, Argent X, Bitmap Box, Brick. DYDX, of course, is already there. Dope Wars, it's a cool game. Diversify, we know Diversify, they're there. Immutable X, the ecosystem is getting larger and larger, so I expect this website to fill up with tiles. What do you think about this?
Oh, I think on the other side of the bear market, Ryan, we're going to come out with 5-cent transactions and instant finality, and everyone's going to be like, oh, Ethereum solved the scalability problems during the bear market. It's going to be great. Sorry, we were supposed to leave the bear market behind.
David's recovered, though. That's bull market David talking. Just might take a few months. Let's talk about this, too. The Tally wallet, what are they up to?
Yeah, Tally Wallet, that's a new MetaMask competitor, now has the swap feature ingrained into the Tally Wallet, inside the Tally Wallet. All the fees go into the community multisig, and they have apparently half the cost of a MetaMask swap fee. And then they finish up the tweet saying, you'll want to give this a try before the DAO launches, ... I wonder what that means. Ryan, what do you think that means?
You'll want to give this a try before the DAO launches. I don't know what hint they're dropping here, Dave.
What do you need to launch a DAO?
Huh.
There's literally only one thing that you need to.
Does it start with a T?
It does start with a T, and it's not Tally.
Okay. We'll let Bankless listeners derive what this tweet could mean for themselves, but hopefully you can read between the lines there a little bit.
I will say that when you advertise the schmear-schmop that's coming, it generally becomes crowded. It definitely becomes a crowded thing. So eyes out for
why
that.
not? Why not say it? Everyone knows everyone else is going to do it as soon as they can, as soon as it makes sense. So why not? Just hint the schmear-schmop.
I guess so. Yeah, the schmear-schmop.
This is cool. This is not something that's being hinted at from our friends at Ledger. They wanted us to let you know that there's a new Ledger device that's out. This is Ledger, the hardware wallet. I don't have one of these yet, but I want one. And the reason I don't have it is because it just came out. This is the Ledger Nano S Plus. So maybe you have a Ledger Nano S. You probably do. Maybe you have the other version of Ledgers as well, Ledger Nano X. The Ledger Nano S Plus is a new Ledger device that has just been released. Bigger screen, more memory, more stuff you can do on the wallet side of things, including when you plug it into Ledger software, the ability to manage your NFTs, send and sign your NFT transactions with full transparency in Ledger Live. So this is like taking the Ledger that everyone knows and loves and probably already has and like upgrading it, making it better.
Yeah, so this is like for the right mental model, I think, for this is like this is the new shiny iPhone SE is what the Ledger S is. It's like the more affordable version of Ledger, the other one being the Ledger X, which is kind of like the iPhone Pro. But this has gotten a big upgrade to kind of look like the Ledger X, which I have. I have both the old Ledger S and the current Ledger X. And I thoroughly enjoy the Ledger X, but it's looking like the Ledger S is getting the glow up to look a little bit more like the Ledger X, but also being a little bit more affordable, just clocking in at $80 for one of these things.
Yeah, it's super cheap for a new product like this. So go check that out. I think these aren't going to last long. Like Ledger has had
they always sell out.
Yeah, they always sell out, and their supply chain is difficult.
Another reason to be bearish.
Stop, okay? Just get your Ledger. That's what you should do. There's a link in the show notes. Get a Ledger Nano S Plus. Go try that out. Let us know what you think of it. Immutable. They just raised $200 million. Now Immutable, the company, is valued at $2.5 billion. Of course, folks that have been listening to Bankless know what Immutable is. It's a layer 2 solution, particularly for NFTs. What's the significance of this raise, David?
Yeah, so this is not too long ago, Immutable announced a partnership with GameStop and had the GameStop development fund, and people got really excited about that. But then they got disappointed in the fact that the funds from this came from a sale of IMX. This is not that. I think
this is not the token. This is the company itself, I believe, that has raised $200 million in Series C funding.
Yeah, and so valued at $2.5 billion, which is distinct, although related to the 3.2 fully diluted valuation of the IMX token currently. But this is all going to go into building games in the gaming ecosystem on top of Immutable X.
More layer 2 dry powder. This is cool too. WalletConnect just announced they've raised a little bit of money, $11 million worth. What's WalletConnect, David?
Yeah, WalletConnect is a nice way. I use it to connect some of my mobile wallets to whatever I'm doing on desktop. So Argent particularly, if I want to use anything with my Argent wallet, but use a desktop app like Uniswap or Compound or whatever, you can scan a QR code using your mobile wallet using WalletConnect, and the QR code will link your WalletConnect wallet on your mobile phone to whatever app you're using on desktop. So it's a nice hybrid mobile desktop connectivity feature, and actually just really useful and fantastic UX. And they've raised $11 million to help grow out WalletConnect. So congrats to the WalletConnect team.
Yeah, you know what's really cool is I remember WalletConnect back in like 2018, 2019 when like there was very little funding in crypto, and it was kind of thought of as a public good with no funding, no real business model, and like not really a strong way forward from a revenue perspective. Now here they are in 2022 getting $11 million in funding. How things have changed. And I think that's because like tokens have changed things, right? So now that there is a way to monetize a public good. We've seen this with ENS previously, which didn't really seem to have a good monetization strategy back in 2018, 2019. We're seeing this with WalletConnect. We're seeing this with all sorts of projects. So it's very cool to see good public goods-esque projects get funded in the way that they're getting funded now.
Yeah, I think people that consider publicly accessible tokens on decentralized exchanges close enough to public goods. So
yeah,
count it.
Yeah. Bain Capital Ventures, they just launched a crypto-focused fund, now worth $560 million. Bain Capital, of course, is like a fairly famous private equities firm, I believe. And, they're a 38-year-old firm. So this is kind of older money PE now joining the crypto fray. Any thoughts here?
Well, it's good timing to be raising $560 million because you're going into a bear market, right?
It is a good time to raise.
It is a good time to raise.
Just don't buy. Just
Yeah.
buy the dip, guys.
Yeah.
It's my advice for Bain Capital. We'll see what they do with their money. All right, who's this? Diagonal Finance. They're excited, they say, to announce that they have raised $2.5 million in a pre-seed round. What are they going to do? They're going to enable crypto native subscriptions on Ethereum. What's that mean?
Yeah, so this is using the super fluid streaming payments protocol.
Really?
Yeah. So this is
Okay.
a startup built on top of a startup. So that's already pretty
Nice.
cool. And so this is rather than just, I don't know, however you would normally do subscriptions with crypto. I don't even think that you could.
There's not really a way.
There's not really a way. With Superfluid, you can stream like microtransactions your subscription. So like, I don't know, you pay for Netflix like 1 penny at a second or whatever the right math is.
How about a bankless premium membership?
Something like that too. That would work too. And obviously you aren't paying gas fees for this. That's kind of the workaround that Superfluid offers. So on-chain subscriptions, now a thing coming out of Diagonal.
Subscriptions in 2022 were $7.3 trillion. So that's a fairly significant market capture if Diagonal can do this. David, A16Z, they're at it again. They've just invested in Lido Finance. How much do they put in here?
$70 million into Lido. So this has to be a discounted token vested lockup investment out of Lido. So probably it's discounted valuation on the Lido token going into A16Z, probably locked up for a number of years.
Good investment in proof of stake. A16Z is getting. Speaking of good investments, one of the best investments you can make is getting a career in Web3. Join crypto. Get a job in crypto, as we say every week.
If you can get a job during the bear market, you're going to thrive during the bull market.
That's the pitch. I thought we agreed during the break we'd stop saying the B word, David, but we can't.
Bull or bear?
True. Not bull, not bear, but bankless, okay? Because bankless is featuring an editor. That's the number one job. Do you know that? Do you know we're hiring an editor for the Bankless newsletter?
Who put that?
It seems like a great job. I'm gonna hold on this. Look, Bankless, fantastic newsletter read by over 150,000 crypto natives. Actually, more than that.
Yeah,
I don't know who wrote that, but it's old news. Okay, we're at 175,000 now. Anyway, we're looking for an editor. If you can write, if you've got some skills in the crypto space, if you're a Bankless consumer, go ahead and apply for that job. Let's talk about a few more of the jobs on the jobs board. I lost it. Here it is. A senior product manager at the Bankless Academy. I guess, wow, is this Bankless DAO? Hey, we're hiring for Bankless stuff.
Wow, Bankless is hiring across the board, both DAO and HQ.
A senior product manager is super rare. What an awesome job that would be, an NFT company. A senior technical product manager at Runtime Verification, a head of marketing at Status.im, an operations manager at MakerDAO, lead financial analyst, strategic finance at MakerDAO, DeepDAO's hiring, Prima's hiring, Tally's hiring, Novel's hiring. I could go on. There's a lot more at the Bankless Jobs website. Go ahead and check that out, guys, and get a job during the B market.
During the B market. That's a great way to put it. Listeners can hear whatever they want to hear.
News time. All right, news time. Let's start here. This was a crazy story that I read. This is, I guess, is the Ukraine thread, but it sort of read like a crypto dystopian novel a little bit.
A little bit, yeah.
Ukraine is buying bulletproof vests and night vision goggles using crypto. That's what they're buying.
I mean, it's better than like AK-47s and missiles, I think. That would be a lot more contentious. Bulletproof vests, night vision goggles are I mean, one's to protect you, one is definitely to help kill other people. But again, this is what we talked about last week on the roll-up. Like when you donate your crypto assets to the Ukrainian government, they can go buy bombs with it.
And it's not just that, it's the military suppliers themselves. They are now spinning up crypto accounts so they can accept crypto.
Oof, that deserves an oof. That's an oof.
Right? Doesn't look at this, man. This just reads like a dystopia novel, like world's at war, and now people are using crypto to like buy military gear in order to protect themselves, in order to like
permissionless payments for military gear is a scary sentence.
Right? That's the world of 2022. I guess on the flip side of this, the happy side of this is a summary of all of the inflows that went to Ukraine, and for various things, many different things. But look at the top line here. ETH donations, $18 million.
Yeah.
That beat out Bitcoin. Bitcoin is $10 million. And the rest, I think it's over $55 million or something like this. The rest were in ERC20s. There's some DOT donations as well. But what's interesting about this is ETH was now the money, not Bitcoin. Mm-hmm. ETH was the main money provided to Ukraine. Something we've been saying for a while is ETH is money. Looks like it here.
Yeah, and my bias is definitely going to come out on this one. But like, the Ethereum community generally a little bit more altruist, I would say, than the hardcore conservative nature of Bitcoiners. And Ethereum community showed up more than Bitcoin did. It's important to note that like not only did $10 million out of the Bitcoin came and got sent to Ukraine, $18 million out of Ethereum. But the Bitcoin market cap is like 2.5 times the size of Ethereum's market cap, which means the total wealth held by Bitcoiners is 2.5 times the total wealth held by people that hold ETH. And ETH donations almost doubled Bitcoin donations. So the Ethereum community, I think, much more tapped in to the global world that's going on and where needs need to be met.
ETH still definitely underrated as a money in the way that Bitcoin is rated as a money. Okay, so this is the story in Ukraine. Ukrainian deputy minister just reiterates a call for crypto exchanges to block Russian users. And you can kind of get in their headspace. They're just doing whatever they can to survive. And they're calling on the rest of the world to just do whatever they can to sanction Russia in all various ways. But I don't know if we should always be listening to them. It's kind of the same reason we don't have the victims of a crime as jurors in a court case, right? They're too enmeshed, entrenched in the problem to actually provide, a more objective,
cool-headed response.
A cool-headed response to this, and this is sort of what they're saying. So they want all crypto exchanges to just block all Russian users. That's a message that's coming out of Ukraine right now.
Yeah, and how helpful is that really? Like the Russian individuals of the world. Who I think we can feel pretty damn certain that Ukraine does not have a Coinbase account or a Kraken account or any of the other oligarchs. They're too easy to find. But that leaves like the Russian citizens, the Russian users of these crypto accounts. And like, how is freezing their accounts going to help anything? Like bombs are still going to drop on Ukraine, even if you freeze Russian users out of their Coinbase account. So this one, as much as I stand with the people of Ukraine and want the war around Ukraine to end as soon as possible, I don't see this one moving the needle.
Elizabeth Warren, related to this, just crafted a bill that targets cryptocurrency exchanges in Russia sanctions. So she's worried, I think some lawmakers are, particularly Elizabeth Warren, that cryptocurrency might be used to sidestep existing sanctions. There are a few interesting quotes in this article. Senator Lindsey Graham says, cryptocurrency is rearing its ugly head here. As you sanction the Russian central bank, which is a good thing, I worry about how the cryptocurrency could be used by the Russians to stay afloat.
that darned cryptocurrency.
I think the language in the bill says the provision would make it easier to verify the identities of customers and transfers to private crypto wallets by requiring financial institutions, that is like the exchanges of the world, to keep detailed records and submit reports to the Treasury Department. So basically, they already, a Coinbase or a Kraken or a Gem, they already AML KYC everyone. Now Treasury wants a copy of all of the identities of all of the crypto wallets that they're AML KYCing. Whereas before, you'd expect Coinbase to sort of have that information in their own private records in case they need it. Maybe there's a court order, some sort of, reason to give it to authorities, but otherwise they'd keep it private. Now, Treasury wants a direct data feed so that every time you deposit or withdraw from a crypto wallet, Treasury knows whose wallet it is. So your address, your ETH address is linked directly to your identity. That's what she's proposing.
Yeah, they're asking all of the crypto exchanges to spin up their own Eye of Sauron directly connected to the Meta Eye of Sauron, which is the central government. And so they're asking, it's like, hey, like we do our job with financial surveillance. We want you guys to take part in equal parts in financial surveillance. That's what's going on here.
Remember we talked about last week that some of the exchanges were resisting some of this.
Yeah.
In particular, they were resisting the complete blocking of all Russian accounts on their platforms. And what we said at that time was like, I wonder how long that's going to last.
Right. 1 week.
Barely, right?
Yeah.
Like, if even. So what happened here, David?
Coinbase will block Russian accounts to sanction the country. So they are just not trying to pick a fight at all during this debacle, and they have indeed kicked off frozen Russian users off of their accounts to comply with sanctions. And so I'm pretty sure this is true, but like once again, crypto exchanges are not regulated in the same way as other financial institutions. And so this complying with sanctions, I'm pretty sure this is true, is optional. Right? Like they are not, because they're not a bank, they don't have to comply with bank regulations. They're just doing it anyways because they don't want to piss off the Eye of Sauron. It's probably a good move. But they have indeed blocked access to sanctioned users.
It's kind of like optional in air quotes, right? It's like when you get letters from the government, how optional is it really? Right. Brian Armstrong put together a thread about this. You want to read out some of these tweets?
Yeah, the main tweet that I think is important to highlight is that tweet number 5 in this thread. We'll link it in the show notes. He says, that being said, we don't think that there's a high risk of Russian oligarchs using crypto to avoid sanctions. Because it's an open ledger, trying to sneak lots of money through crypto would be more traceable than using US dollars, cash, art, gold, or other assets, which is what we've been saying for a long time. If you want to launder money, you shouldn't use crypto. It's a terrible vehicle for that because of the fact that it's an open, public, permissionless ledger. People like Lindsey Warren and
Lindsey Graham, you mean?
Excuse me, Lindsey Graham and Elizabeth Warren. Thank you. Same talking head though. They
totally different sides of the aisle, but somehow the same message.
Yeah, exactly. Like when you go, just because when they go to Etherscan and they don't understand what the hell's going on, doesn't mean the rest of the world doesn't. Like it's a public ledger, you know everything. Just because they don't understand that doesn't mean that crypto can therefore be used to violate sanctions just because they don't get it.
I mean, can you blame the exchanges? Like, we knew this was going to happen. What else are they going to do? Like, are they going to really piss off the nation state? Is that a good idea? I mean, they can't afford to do this. This would cost them their entire business. Obviously, that's what they're going to do. Obviously, that's what centralized entities do. This is the whole reason for DeFi. The whole reason for Bankless is so that we don't have a third party that can surveil us and be the Eye of Sauron and arbitrarily lock our accounts. This is why we need DeFi. What's this take here? It seems related. It's not just Brian Armstrong saying this, but it seems to be like, nation state authorities saying that crypto is a poor conduit for Russian oligarchs. What's this about?
This is from Hannah Lang. At the webinar this morning, the National Security Council Director of Cybersecurity, Carol House, says that the scale that Russia would need to circumvent all of financial sanctions, quote, would almost certainly render cryptocurrency as an ineffective primary tool for the state, which is what we said last week, which is what we said on the Monday opening note 2 weeks ago. Like, the market cap of crypto is about $2 trillion, and Russia and all the oligarchs have like a third of that. That's being frozen. Like, you cannot fit a third of the crypto market cap through Tornado Cash or through like whatever tumbler you have. It doesn't work. And that's aside from how it's all public and permissionless and transparent. And so the more and more consensus by people who know what they're talking about are all like, yeah, crypto wouldn't work for sanctions. So why are we even having this conversation?
What they're having this conversation is an excuse to tighten up the state surveillance on crypto. It's just a nice narrative in the headlines where you can start to get things through and pretend like, the country supports it and pretend like it makes sense.
Terrorism, child porn, Russian sanctions. These are all the same things.
Great excuses to restrict freedoms. That's what's going on. Let's talk a little bit about a news story we didn't get to last week because it was kind of breaking. We wanted to see what happened when it settled, but there were reports, I think last Thursday and Friday, that MetaMask was actually blocking transactions, blocking individuals in Venezuela from putting MetaMask transactions through in the wallet. That's not quite true. It's not quite what happened. Can you tell us what exactly happened? There was some arbitrary blocking, but it wasn't on the MetaMask side. Where was it, David?
Yeah, it was on the Infura side of things. And I believe it was Venezuela. So it did have to do with a geographic region, but it was not out as a result of sanctions or not any pressure by any nation state regulation. Apparently, it was just like a misconfiguration in Infura. So basically like a whoopsies, a bug, an exploit, a glitch in Infura.
What's Infura for people who don't know?
Yeah, so when you send a transaction via MetaMask, it gets relayed to an Ethereum node. All transactions all get relayed to an Ethereum node somewhere, somehow, some way. And MetaMask defaults to Infura. And Infura is a centralized node provider spun up by consensus. It's a consensus product. And so if you need an Ethereum node, because you do, if you ever want to write a transaction or do anything else, you have to send it to an Ethereum node. And so Infura offers that service. And when you download MetaMask, it defaults by pointing to Infura. Infura was the thing that had the whoopsies in the configuration for Venezuelan countries, and so Venezuelans, when they wanted to use MetaMask, said when they went to MetaMask, and then they got this warning saying that there is no node provider for you, basically, and your transaction won't get through. Hooking up a node to MetaMask that's different from the default one is not something that users typically do, just because Infura works so well and we never have had any issues prior, and we still really don't have any issues. But it's important to know that you can quickly and easily and trivially swap out Infura for any other Ethereum node. There's a website spun up by our friend David Mihal called ethereumnodes.com, which just lists off a bunch of public companies or also communities that run nodes that you're welcome to hook into. So if one goes down, you can just pick up a different one, or you can run your own node, which is also an option. And so if the backend node provider for MetaMask ever goes down, do know that you can go to ethereumnodes.com and just pick a different one. Many Bitcoiners have not realized that, Ethereum does not have centralization risk around Infura because there's an infinite number of alternatives. Anyways.
Including running your own node. Yeah, it's just a matter of changing the defaults. Mm-hmm. Although, I will say it is increasingly important that we try to decentralize this data provider portion of Ethereum node infrastructure, right? Because it's also not super practical for everyone to run their own nodes, obviously. And they're like BitTorrent solutions to this, and there's some companies working on decentralized data providers that I think will be very helpful in the future. But yeah, it's a good PSA. It's something to know. But this is a link you included in the agenda, David, and I'm wondering if you could explain this. This is sort of Ethereum versus Bitcoin sanctions, and this is a document here. What is this document talking about, David? The difference between Bitcoin versus Ethereum sanctions?
Yeah, so this is a document I put together when I heard on a podcast about how Bitcoiners were pointing at this event of Infura being down for certain parts of the country, and Bitcoiners were pointing at Ethereum like they always do, and they say this is why Bitcoin is designed the way that it is. It's maximally simple, it's maximally manageable, and there isn't any sort of just node risk like this. Ethereum always centralized around Infura, and so this podcast, the host just kind of regurgitated a bunch of Bitcoiner takes, and I messaged him. I said, "Yo, I'm kind of disappointed in your reporting because all of this stuff is just basically wrong." And so I put this document together. We'll put it in the show notes, which he asked me to put together as a statement as to trying to correct the record. And so I'll just share a few lines here. I say that Bitcoiners often see a few chinks in Ethereum's armor, how MetaMask defaults to Infura, the larger state size of Ethereum's nodes, and then they extrapolate it into hyperbole and use this as a narrative as to why the simplicity of Bitcoin is good. But Bitcoin does not shine during times of nation-state ire by not even making on-chain native financial applications possible, which is kind of where the need for Infura comes from in the first place. Bitcoin waves the white flag of providing self-sovereign finance in a trustless way and gives it straight to the centralized institutions who are forced to bend the knee to those that have monopoly on physical power. The absence of native DeFi on Bitcoin allows Bitcoiners to sneakily critique all of the Ethereum chinks in the armor that comes with actually taking the hard route of providing native DeFi. And so here's my spicy take. This is akin to a Cheeto dust-fingered couch potato critiquing the landing of a pro sports like gymnast. Sure, they didn't stick the landing, but they did 3 backflips and a 720 twist. And so
armchair keyboard warrior sort of takes.
Yeah. And so the last spicy line that I have is that Bitcoin shouldn't be getting props because it doesn't even try to offer DeFi. That's not a solution. That's a cop-out. And it's not a pro argument for Bitcoin just because it succeeds at not trying. And so if you are a Bitcoiner who likes to FUD Ethereum for having some sort of centralization risk around Infura, read this and reconsider.
David's talking about Bitcoin maximalists.
Yes.
In particular,
Yes.
that like to charge. And here's the point, right? If all of your banking transactions have to take place on a centralized exchange, like a BlockFi or a Celsius or a Coinbase or a Kraken, like how many orders of magnitude worse is that?
Yeah.
We just saw what Coinbase can do. It can block an entire country, an entire class of citizens from accessing their crypto, right? And this is the need for DeFi and why I think Ethereum as well is like already ahead. Let's talk about this. I think this is the big story of the week, maybe.
This is the big story.
The Biden administration just put out an executive order. This was a long-awaited executive order, like all the way months back when we were talking to Andrew Yang. And I think he re-echoed this in that ETH Denver, the executive order was coming. A lot of people in crypto were terrified about this. Right. They thought the executive order would be a Biden administration crackdown, a complete crackdown on crypto, a very hostile attempt to like kneecap crypto in the United States. But it was not that.
No.
Maybe it was actually bullish. What was inside this thing?
The fact that it wasn't just a massive failure of an executive order, and then the fact that it actually looked like they were trying to do an intentional and like well-researched job is like the bullish part of this. It's like, oh, they're not just being ridiculous nation statists like Elizabeth Warren, and they're actually taking a well-reasoned approach to this. So that's what the market, I think, reacted to. Basically, Joe Biden said, hey, let's spend some time, let's spend some resources and research the best way to regulate crypto.
Oh, cool.
Yeah, with a measures on focuses on 6 different areas: consumer protection, obviously, financial stability, illicit activity, U.S. competitiveness, financial inclusion, and responsible innovation. Responsible innovation, the last one being like the thing that everyone in crypto is really, really happy about. So there's some things to talk about, but generally, people in the crypto world are all pretty like happy with this executive order.
Look at 3 of these things. Actually, all of these things actually like matter a lot. U.S. competitiveness. Thank you for considering that. Financial inclusion. That's important. That's something Web3 can bring. Responsible innovation. Like, absolutely. Let's talk about the innovative side of crypto rather than all of the kind of illicit activity side of things that people want to dwell on. It's fantastic to see this kind of language in a report. And this is just a call for investigation into these areas. Right. It's not a call for like some sort of decision right now or some sort of immediate action.
It's a call for a decision after research. However, I will push back a little bit with what you said, Ryan, because there's 2 sections that kind of make little to no sense to me, but I think that if they do their research, they'll discover why. The illicit activity one, this is a statement from President Biden. The president has called for an unprecedented focus of coordinated action from federal agencies in mitigating illicit finance and national security risks posed by cryptocurrencies. He is also urging international collaboration on this issue. We already know from chain analysis that like very, very illicit illegal transactions happens using crypto rails. Like less than 1% is like the latest figure that I got. So like I'm hoping that when they go and investigate the illicit activity being used by crypto rails, they discover like, oh, there's actually not a lot there. They in this article they cite the Bitfinex hack, which we know about, and then the trope of how like following the Russian invasion of Ukraine, they're worried about how Russian individuals can use crypto, which again we've already discussed. There's another one.
Do you think this is like a good faith effort though?
I think yes, I definitely think this is a good faith effort.
Wow.
Certainly.
I did not expect a good faith effort.
Right, yeah. But, I'm happy to be surprised. Another thing that came out is climate change. Biden also dropped a mention of the sheer energy costs baked into digital currencies like Bitcoin. He wants the government to study ways to make crypto innovation more responsible, reducing any negative climate impacts. I think this is actually really hilarious. He wants the government to study ways to make crypto innovation more responsible. Oh, do you mean what the Ethereum researchers have been researching for the past 6 years with proof of stake? Like, don't worry, guys. We got this. We've been doing this for years now.
Well, do you think a bunch of government people in the executive branch are now going to have to listen to Bankless and get like schooled up on what's going on here?
Oh my God, are we going to be cited as a source in some sort of like federal statement?
Oh God, I hope not. But maybe a bunch of new podcast listeners. That'd be kind of fun. Yeah. So, what are the takes from around the industry on this?
Yeah, so Jeremy Allaire and also Jerry Brito from Jeremy Allaire from Circle, the stablecoin, put both some threads together that are linked in the show notes. So we will read out a few key tweets, starting with number one. Jeremy says, White House executive order and U.S. government strategy for digital assets, a thread with thoughts. TLDR, this is a watershed moment for crypto, digital assets, and Web3, akin to the 96-97 whole of the government wake up to the commercial internet. And then I'll skip to tweet 3. Specifically, the executive order calls for nearly every relevant federal agency to take on understanding and developing policy positions that understand and address risks, but vitally that support innovation and U.S. national economic competitiveness. And then skipping to the last tweet. For those of us in the crypto community, in my opinion, this executive order should be viewed as the biggest opportunity to engage with policymakers on the issues that matter. The proverbial doors of policymakers are wide open. This is now a national conversation in the U.S. So like this is the policy doors are wide open for the crypto industry to go through them and educate them, but also for the banking industry to come in and FUD us. So like the board is set, the match is about to begin. It's now us versus like basically the banking industry to make sure that crypto is treated well. So those are the key tweets out of Jeremy Allaire from Circle. So here are 2 tweets from Jerry Brito out of Coin Center. Coin Center being the basically our lobbying agency for the industry. Jerry Brito says, the message I take from this executive order is that the federal government sees cryptocurrency as a legitimate, serious, and important part of the economy and society, and I think it's a good signal to serious people who have been holding back from getting involved. The executive order also presents another striking contrast with alarmist politicians and media, in that it is ultimately a call for further study and deliberate planning, not a reactive rush to legislate or regulate. And this is why we are happy. Bullish. Yay. We like it.
Bullish David's back on the back of an executive order, nonetheless. Things I wouldn't anticipate in 2022. More of them coming, I guess. That's awesome. That's really great. And I think our friend Jake Trevitsky maybe summed it up really well. I'm going to read out his tweet. Anyone worried that President Biden's executive order would spell doom and gloom for crypto can fully relax now. The main concern, yes, I feel relaxed. The main concern was that the executive order might force rushed rulemaking or impose new and bad restrictions. Exactly. That was my concern. But there's nothing like that here. It's about as good as we could ask for. Guys, you can fully relax now. That's not... Do you have some relaxing music?
I don't.
Oh, that's a cheer. We
okay, but I got one for Elizabeth Warren, though.
Yeah. I'm relaxed. Yeah. This is great. This is great news.
Cool.
I'm really excited about this. Very happy. I guess that's all we have to say about it. Maybe we'll get some more content on this in the weeks to come. But it sounds like, as you said, the game and the pieces are now laid out, and we just have to play our hand. There's nothing scary about this executive order, but we got to hit the gas pedal and keep moving forward in DC.
Yeah. Maybe actually relaxed is actually not the right way to put it because we still have to play the game. But the game appears to be fairly set and not rigged against us. So that's nice.
Well, that's nice. That is nice.
It's a nice
Great
change.
news.
Yeah.
Ethereum stuff. Layer 2 continues to get cheaper. What's this?
Optimism once again reduces transaction fees by about another 30 to 40%. I mean, when you keep on doing this for like 7 times in a row, like things start to approach zero really, really fast. As of recently, like the last time this happened was like on March 3rd. And what is it today? March 9th. So on March 3rd, it called out, got compressed by 40%. And then we're doing it again by another 40%. Like fees are approaching zero. Which is kind of unfortunate because now the gas fees on the Ethereum L1 are also approaching zero. Like it starts to matter less. But hey, at least when the bull market finally rolls around again, layer 2 fees will actually be like close to zero.
It's kind of like the Bankless podcast is just like a repeating cycle of us being sad about gas fees too high and then us being sad about gas fees too low. And we're in the part where we're sad about gas fees too low.
Yeah.
But it's awesome for the long term. Honestly, this is exactly where we need to see the market going. Aave's on Optimism too. That's happening. This
Aave
is
contracts deployed on Optimism, yeah.
Contracts deployed on Optimism. So guys, layer 2 does not stop getting built out. NFT side of things. Let's start with this story.
This is where
you
the
said there were some
shenanigans come from.
shenanigans. Okay, tell us about the shenanigans. Tell us what's here.
Tai Lopez, who I don't know who he is other than an influencer, has released his own NFTs. I think very inspired by Gary Vee. Gary Vee, he minted these NFTs that were redeemable, right? Like one of them was redeemable for like a gift box, and another one was redeemable for a phone call with Gary Vee, and another one was redeemable for whatever. And his community just loved it. Like big success, everyone loved it.
He executed well.
He executed beautifully. Tai Lopez is taking a similar approach, as in like redeemable NFTs, but these ones are egregious. These are ridiculous.
Kind of cringy.
Oh, these are terrible. Okay, so like let's go through some of these. I think the most I'll save the most hilarious one for last. One-on-one Michelin star restaurant with Tai Lopez. Like I'm sure that's a very that for the right price that would be interesting for the right fan. But it's being sold for 29.5 ETH. I don't even know what that is in dollar terms because I think in ETH terms. But 30 ETH times, where are we? $200 at ETH price or 2,000? Oh, 2,000. That was
Don't
a bear
say
market.
200.
That was a bear market joke.
Scare me.
That's like this $80,000 for a one-on-one Michelin star restaurant with Tai. You're allowed to pay $80,000 to take Tai Lopez out to a Michelin star restaurant. One-on-one WhatsApp access to Tai's personal phone number. He's basically selling his phone number for 32.8 ETH. That's a whole entire Ethereum validator for Tai Lopez's number.
Tai you up? Like, what are you going to do with that? Like, what are you going to do?
He doesn't even guarantee that he'll respond. One-on-one, watch a movie with Tai Lopez for 13 ETH. You can't even talk to the guy. You just got to shut up and watch the movie.
Just watch a movie with him? Is he going to have popcorn? Like, wait, is that in person? I hope it's like on his couch or something. Can't be like...
You guys are on Zoom and you guys press play at the same time. 13 ETH, please. Okay, here's my favorite one. A one-on-one $10,000 game of horse with Tai Lopez. For the low price of 20 Ether, you can have the ability to play a game of horse with Tai Lopez. And if you win, you get $10,000, which is like 1/5 the cost of what it costs to buy one of these things.
$50,000 for a game of horse with Tai.
Yeah.
Wow. Yeah. Better make that last.
Wait, if you lose the game of horse, you have to pay another $10,000?
I hope, I don't know. Who knows, man? Do you think that maybe we just don't get it because we're not part of the community and this is just laughable, but Tai has some super fans that to him, he's just kind of like a Taylor Swift or a Kanye West or like someone actually worth this kind of, experience price. You think we're the people who don't get it? You think there's people in the community who want this?
Yeah. Are we the blank holes? No, we're not. No, there's no way.
It's mostly egregious. It's an ETH too.
Yeah.
Why would you spend your ETH this way, guys?
God damn.
Yo, the merge is happening. People spending like 20 ETH on a game of horse. Do they know how much this is going to be worth post merge, David?
God, this is going to be one of the most financially terrible investments ever made by law. I hope people, well, apparently people are actually buying these things. And because you can actually see it on chain. How many of are actually being bought, I don't know. But yeah, either way, ridiculous.
Wow, it's crazy. Do you think this is gives NFTs a bad name, this kind of thing? Because this is what makes headlines, right?
Bigly, yeah. Like
it's kind of a joke.
This got onto my radar just because somebody tweeted this out. It was like, oh, this is clearly the end of NFTs. Like Tai Lopez is ruining it for everyone. And like honestly, like here's Bear David coming out. This feels like the last gasps of ICOs in 2018. The ICO mania was in 2017 when they all worked out. The ICO mania continued for another year while they got more and more ridiculous and more egregious and just more and more cringe. And like this is that to me, where like that was the ICOs, this is NFTs. This is like the cringiest NFT thing I've ever seen.
Really? Was it worse than whatever we talked about last week with those mutant NFTs? What's his name?
You're right. Yeah, Kevin and Pixelmons.
Yeah, well, Pixelmons.
Good
Another
point.
top
Now,
signal?
you have to make me consider that, Ryan, but like I'll make you consider that this happened 2 weeks in a row.
What's happening next week?
Oh God, I don't even want to know.
All right, well, speaking of cringe, David, former file sharing site Limewire is getting ready to relaunch as an NFT marketplace. Don't tell me this is another top signal. Remember Limewire back in the day? Did you ever use Limewire?
I used Limewire so much.
Yeah. It was great.
It was great.
Well, it's coming back. How would you like it as an NFT platform?
What the hell? What the hell? What the absolute hell? Yeah, I mean, you can't use it yet. You can join the waitlist or say that you're a creator. I mean, they got to just be rotating the brand into an NFT marketplace platform.
Because NFTs are hot. That's why.
Because NFTs are hot.
I mean,
but again,
not?
a little late, guys. Like, you have to wait for the NFT markets to come back.
Well, it's we'll see what happens there. Maybe we'll be pleasantly surprised. I doubt it. Andre Cronje. He is a DeFi builder and kind of a famous DeFi builder. We had him on the podcast in 2020, I believe was the last time we had him on the podcast. We were talking
April
about
2020.
Yeah, the launch of Wirearn and YFI and his whole strategy, and really interesting developer. He's gone on since then to build a lot of things. Had his hand in a ton of different DeFi projects, and even like sidechain, alt layer 1 networks like Phantom. Well, he just quit. It sounds like almost like a rage quit, maybe, although there's not much communication as to what type of departure this was, because he like deleted his Twitter account and everything, and announced through, I guess maybe a business partner of some sort, that he's terminating all of his work on all of the apps and service. There are 25 of them that he had formerly worked on. What's this about?
Yeah, I think I'll actually zoom all the way back out just to provide context to this. When Andre came on our podcast, this was right after Yearn got kicked off, which Yearn like stole the show in DeFi for like 2 weeks. People couldn't stop talking about it. And so that's kind of where Andre like rose up in fame, just because he built this product and this token that he gave away for free and didn't really collect any of himself, went from $0 to $60,000 in like 4 weeks or something. And so that's when like the brand of Andre came around. But he came onto our podcast like in kind of a storm, talking about like how like he basically bought off, but didn't realize what he was going to turn himself into. Like DMs, like when like the
It was too much.
it was too much attention, like too much degens. People like now asking Andre to pump the price, him being way too responsible for things, and that was like that was over 2 years ago. Wow, it's crazy that that's been that long. Anyways, Andre has since then built other stuff, which got him even more clout and put even more pressure on him as an individual. And that kind of continued. He started building on Phantom, building more products, just kind of leading the charge of like the degen side of crypto, people aping into Andre contracts. Like Andre kind of turned into a meme. And then he was also tangentially involved with the whole Wonderland, Danny Sesta, Xerox Seafood drama. And I think that's kind of the straw that broke the camel's back, and actually why I think we see Andre having quit because like he just didn't.
Just burnt out?
He just burnt out. After the whole Xerox Sifu Quadringa Wonderland Danny Sessa drama, he wrote this tweet saying like, I don't support Danny's actions. I just want to build. I don't want any of this drama. I just want to build stuff. And so I think after like slogging through the mess of crypto Twitter and degen Twitter and degen crypto life for 2 years, he finally just called it quits. And it's like, I've had enough of this, which he's not the only person I've seen do that in the last like month or so. Another reason why David's in bear market mode. But yeah, so I think he's just kind of done with dealing with all the toxic DeFi community, which he's kind of gathered around himself accidentally. But yeah, the end of an era. I don't think he'll ever really be gone. Maybe he spun up an alt, a private alt that we don't know who it is, so he can still participate. But the persona of Andre is being sunsetted, at least for now.
I do hate to see DeFi builders go, but one thing that I am actually a little bit relieved to see is I feel like we were getting into an unhealthy position with respect to some of these DeFi builders and the cult of personality around them. Like Danny Sesta was a fantastic example. And I think something similar was also happening to Andre, where people just ape into these projects, just because these DeFi builders' names were associated with them. And then it almost seemed to get to a healthy place, not necessarily with Andre. I'm not too sure, but I was getting vibes that some of the builders of these projects were like pumping their own projects in unsustainable ways as well. And if not them themselves, like kind of the crowd that gathered around them. And it just seemed really unhealthy and unsustainable for the space. And so I guess my take is this: is personality cult DeFi dead? I kind of hope it is. Maybe Andre as well hopes it is. I don't know. Maybe some of the other DeFi builders in the space who just want to code as they say they want to do, are happy with kind of personality cult DeFi sunsetting a little bit. And I do hope it's the end of it, at least for a season. This always returns though. Like when there's success, when there's like bull market
when number goes up, yeah.
When number goes up,
the frogs
we
come
see
out.
this every single time, right? And again, like tourists, we talked about tourists in crypto and the settlers, right? And I guess if you're a settler, you kind of get tired of seeing the same thing every cycle. Right. But it does feel like the end of maybe a local cycle here of personality cult DeFi. And honestly, David, I think that's kind of a healthy thing. Maybe it's a B market thing, but it's a healthy thing.
I tweeted out earlier this week. I still never found out who Danny Sesta was, which was like a joke because like that's what started the whole like frog drama with us. Yeah. And like,
what kind of replies did you get on that one?
Completely modest, normal people with an absence of frogs.
No way.
The frogs are gone from crypto Twitter. Like there are no frogs.
You said that 6 weeks. Well, you did say that 6 weeks ago.
And I got absolutely hounded by the cult of personality.
Driven off of the internet almost.
Yeah. I had to like fucking take a personal day and just relax. And have an IPA. And like
so
now
dumb.
I get to joke about Danny Sessa because the tourists are gone and your boy's still here. And he always will be.
Look, man, we invited Danny on the podcast and he said he would come on and
multiple
then
times.
He said he would come on multiple times in private like DMs. He said it publicly. He never came on. We never got to find out who he was.
Bankless listeners are ever confused as who the settlers are. You're listening to them right now.
We're not leaving, okay?
I'm not leaving.
This is Leo DiCaprio meme.
It's the bear market. I'm still here.
You know what? I'm excited to do Bankless. If this is a B market, David, I'm excited to do B market season.
That's kind of what I'm getting
tribe.
into. That's the mood I'm trying to invoke. Like there are plenty of good reasons to be stoked about a bear market.
A B market?
B market.
Goldman Sachs is connecting clients to Galaxy Digital's ETH fund. I just think this means Goldman Sachs is a headline. Goldman Sachs has a bunch of clients, of course, with a lot of money, and they want an easy onboard to Ethereum. So they are onboarding to Galaxy Digital's Ether fund, probably getting commission on that, as Wall Street likes to do. So,
basically just a finder's fee for funneling people into Galaxy Digital's ETH fund. Fine.
I don't hate it.
Fine.
Yeah.
Whatever.
More people in crypto.
Goldman Sachs has done worse things.
This is a little bit of drama.
Yeah.
Well, let's talk about what this drama is. So Laura Shin released a book that you have. I'm not sure if you've read it yet, David. It's a pretty thick book.
No.
But we've seen a lot of, like a couple of weeks ago, we talked about the DAO hacker identity reveal. There's some other things Laura Shin uncovered and revealed in this book. Why don't you talk about this spat between Charles Hoskinson and Laura Shin on Twitter?
Yeah, so this got started off by somebody tweeting out, reading Laura Shin's book, it's great to discover Charles's early years portrayed on there, #crypto. And then Charles responds, a great work of fiction. Tough market to beat George R.R. Martin and Tolkien, but we wish her well. Basically saying that everything in Laura Shin's book is a fabrication fantasy. And so Laura Shin comes in, taking the opportunity to probably promote her book, says, hi, Charles. Speaking of fiction, do you want to address the discrepancies between your claims of dropping out of a PhD program and the school's assertions that you were enrolled as an undergraduate? Yeah. So Charles has said that he never got his PhD, but he was a PhD student for a while before he dropped out, probably to go do cryptocurrency stuff. And then the school allegedly never even had the PhD program that Charles claims that he was a part of. And so that's one thing. Like a lot of people, a lot of deep Ethereum people will kind of know Charles as like what's the word for a chronic liar? He's a chronic liar of sorts. But then. Who had a really good take? It was Eric Wall had a really good take that was retweeting Laura Shin's comments and said something that I think we're all thinking. And Eric Wall says, if you think about a person who so easily fabricates the truth about what such a simple thing as being a PhD student, not even having a PhD, but being once a PhD student is what he lied about, don't you think that maybe, just maybe, the claimed technical impressiveness of Cardano is just a tad bit exaggerated? I think this is a great microcosm of my concerns about the Cardano ecosystem at large. It's kind of a cult of personality, as we were just discussing, project around Charles Hoskinson, who appears to be a chronic liar. And that, Ryan, is my spicy takes for the week.
There you go. You get one per week, and one spicy take in per week. That was it. Do you know, is this the part of the market cycle where we call out people who have been maybe deceptive?
Yes.
Like when price goes down, everyone's like,
the witch hunt part of the market cycle.
We see, again, it's classic. We already saw it. We saw it in 2008 as well. And it seems like these cult of personalities they can't persist during bear market cycles, at least not in the same way they have during bull market cycles. So that's another turning of the wheel, I suppose. More indication that it's B season. There was also an ENS vote that ended Sunday. David, can you talk a little bit about that and the interesting graph accompanying it?
Yeah, this is, I think, coming to closure with a lot of the ENS drama that happened about a month ago. Basically, to speed run that drama, one of the founders of ENS, Brantley, very Catholic, tweeted anti-homosexual things, anti-LGBTQ things, got onto it, Twitter Spaces, did not back down from it, caused a bunch of drama in the crypto Twitter sphere. And then there was a movement to remove Brantley as a delegate towards ENS. And ENS, it's a DAO with delegate governance. And what we are looking at is the vote as to whether we should remove Brantley from the ENS DAO delegation. And really, that's the backstory. But really what we want to talk about here is it's actually really cool to see the transparent nature of how and which delegates voted for what and how big they are. And so you get to see all of the delegates for ENS and how they voted. So it's basically like representative democracy, and you get to see your representative. And so you as an ENS holder, you could vote for however you see fit if you want to individually vote directly, or you could just delegate your ENS to a delegate, such as Coinbase.eth. Coinbase is a delegate. RainbowWallet.eth is a delegate. Nick.eth, Nick Johnson. Griff.eth, which is Griff Green, I'm pretty sure. Simona.eth, which is Simona Pop. You get to see how your delegates voted, and you also get to see the weight on which they voted with, which is how much delegate weight that they have behind it. So as of the end of this vote, Brantley was the against side won, which was tipped over by Brantley himself, which is something to consider, which will actually retain Brantley as part of the ENS delegation system. But the point is the transparency.
The transparency and I guess governance system in action, particularly delegated governance. And this reminds me of, you said representative democracy, also reminds me of sort of corporate proxy vote, basically, because everything's weighted by allocation of capital and how much capital you have and who you're delegating to. But this is a DAO coming to a decision on something. and all of the delegates weighing in. So I think it's healthy from that perspective and a good thing for governance to see. I just love the transparent breakdown as well. All right, David, takes time. You ready to talk about the takes of the week?
Let's do it.
All right, we will do it in just a second. But before we do, we want to thank the sponsors that made this episode possible.
The Brave browser is the user-first browser for the Web3 internet, with over 50 million monthly active users. Control your digital footprint with built-in privacy and ad blocking. Inside the Brave browser, you'll find the Brave Wallet, the first secure crypto wallet built natively inside of a Web3 crypto browser. Web3 is freedom from big tech and Wall Street, more control and better privacy. But there's a weak point in Web3, your crypto wallet. The Brave Wallet is different. Brave Wallet is built natively inside the Brave browser, no extension required, which gives the Brave Wallet an extra level of security versus other wallets. With the Brave Wallet, you can buy, store, send, and swap your crypto assets, and you can even manage your NFTs and connect to other wallets and DeFi apps, all from the security of the best privacy browser on the market. Whether you're new to crypto or a seasoned pro, it's time to switch to the Brave Wallet. Download Brave at brave.com/bankless and click the wallet icon to get started. The Gemini exchange has been my exchange of choice ever since I got into crypto. I use Gemini to both buy the dips and also manage my regular automatic monthly purchases of my preferred crypto asset. On Gemini, you'll find over 50 different cryptos, including many of the top DeFi and metaverse tokens like YFI and Axie Infinity. Using Gemini Earn, you can earn yield on your various cryptos, including 8% on the GUSD stablecoin. Gemini is available in all 50 states and more than 50 countries worldwide. So if you're looking to upgrade your crypto exchange, sign up at Gemini with gemini.com/gobankless and get $15 of Bitcoin after you trade $100 or more within the first 30 days. That's gemini.com/gobankless. ARBITRUM is an Ethereum scaling solution that's going to completely change how we use DeFi and NFTs. Over 250 projects have already deployed on ARBITRUM, and ARBITRUM's DeFi and NFT ecosystems are growing rapidly. ARBITRUM increases Ethereum speed by orders of magnitude for a fraction of the cost of the average gas fee. When interacting with ARBITRUM, you can get the performance of a centralized exchange while tapping into Ethereum's level of decentralization and security. If you're a developer who wants low gas fees and instant transactions for your users, visit developer.offchainlabs.com to get started building your application on ARBITRUM. If you're a user, keep an eye out for your favorite DeFi apps or NFT projects building on ARBITRUM. Many of your favorite apps are already live, with many more coming over soon. You can find these apps at portal.arbitrum.one, and you can bridge your assets over to ARBITRUM using bridge.arbitrum.io in order to experience DeFi and NFTs the way it was always meant to be: fast, cheap, and friction-free.
All right, guys, we are back with the takes of the week. Here's a first take from David Hoffman himself. What's the take, David?
I saw somebody tweeted out NFTs, the quickest way to annoy everyone in your life, which is a funny joke. But this is exactly what they said about blockchain back in 2018. At the end of the ICO mania, after everyone was just done hearing about crypto and ICOs and decentralization, people were like, blockchain, it's the newest way to annoy your families, the newest way to indicate that you're a virgin. Like the word blockchain was just like not in vogue in 2018. And you know that we just heard that all the way down. It's like blockchain, super annoying. And now I just saw this tweet. It said NFTs, the quickest way to annoy everyone in your life. And I'm like, I've heard this before. And so I'm just reminding people that this is what people said at the end of the ICO mania, which is a little bit of, again, a bear market hat, but also pointing to the fundamentals that everyone that talked about how blockchain was annoying probably forgot to buy stuff during the bear market and forgot to make life-changing money in the next coming bull market. So take note.
David is saying there is some market opportunity coming your way, some buying opportunity coming your way. What's his take? Maybe I'll read it. This is the parent tweet was from somebody who said 3 Arrows Capital holds AVAX, that's Avalanche token. Jump holds Terra. Sam, that's SBF from FTX, holds Solana. Sequoia holds Polygon. Paradigm holds Cosmos. Institutions hold Near. Sailor holds Bitcoin. Only Tetranode holds ETH. Laugh out loud. And you are thinking ETH will go to 20K during proof of stake, kind of making fun of the fact that
no one holds ETH.
No big institutions, no VCs, no brands, no mega whales, none of the like big money is an advocate for ETH. They all hold these alternative coins. DC Investor tweets on top of this and says, they may not know it and they may not have meant it this way, but this is exactly the ETH bullish thesis. Run it back, December 2018 style. Look, somebody else recalling the bear market 2018 style. What is DC saying in this parent tweet?
Yeah, so he's saying this parent tweet, the Chishi whoever says, like, all these funds hold all these tokens and they're not ETH. So why would you ever think that ETH is going to run? DC is saying, like, yes, they don't hold ETH. That means that they still have to buy it because they don't have any of it. And so all of the size of these funds, when ETH goes to the merge and people realize that fundamentals matter and all these other chains are just speculation against what they hope could potentially be an Ethereum killer, once they realize it's not, they all have to hold ETH. And I'm actually going to go even further on this. Not only are they not holding ETH, but these are this parent tweet, which they thought was a dunk on ETH, it's actually the complete inverse. It's actually a dunk on all the other tokens. Do you want Three Arrows Capital to be holding your token as we go into a bear market? Because then that means they're just going to dump it. So I would be very nervous as an Avalanche holder that Three Arrows Capital holds its bag holding a bunch of AVAX tokens. And basically this tweet is just listing off all of the institutions that are probably a little bit underwater to some degree with all of their investments. And so if you have investments and we're going into a down market, you're going to sell them. Like maybe they're going to buy more, but like you don't want, in my opinion, Three Arrows Capital to be holding your asset of choice during times of bearishness.
Oh my God, definitely not.
They are going to dump on you.
They are not settlers, okay? These are traders. These are mercenaries. They are going to do whatever is in the financial best interest. Obviously, they're not going to hold through a brutal bear winter. They're going to switch over to USDC or stable coins or maybe Bitcoin and ETH in a bear market. Definitely not the holders of last resort that I would want on my team during the bear market. And DC recalled December 2018. This is sort of what happened in December 18. Like, if this is a B market, I'm not saying it is. If it is a B market, though, everything's going to dump, but some things are going to mega dump. Yeah. Like, dump harder than you can even imagine. Do you remember some assets went down 99%? Yeah. Most never recovered. Okay, so like, what are you holding? Good time to take an objective look at your portfolio and see what other people are holding. What holding camp do you want to be in is the question if this is a B market. Okay, Lynn Alden had a take too. The difference between assets that are somebody else's liability and assets that are nobody's liability probably got a lot clearer to people in recent weeks. What's Lynn saying here?
Yeah, so there's assets like debt, or assets that are conditional on the actions of somebody else for them to be realized. And then there's assets like Bitcoin or Ether or gold that are no one's liability. If you have it, you have it. And you have a lot more security in these assets. And during times of insecurity, during times of chaos, during times of war, having assets that are no one's liability is really, really useful.
During times of sanction as well. You definitely want those. Yeah. See what the real assets are, what the bearer instruments are. What's this take from Nick Carter? He wrote an article, and this is a quote from it. Could you read it out? Yeah,
Nick Carter says, while seizing Afghan or Russian reserves may feel righteous and just, the immediate effect of such actions is to completely undermine the credibility of dollar debt as an international savings device. More or less saying, hey, do you store your value in dollars because you think the dollars are a safe haven? Well, we can also just rug pull you because of how you save them in dollars. This is an asset that is somebody else's liability. If you hold dollars, maybe it's a good store of value because you trust the federal government more than any other federal reserve out there, but they can also freeze your money. Anytime we sanction people, regardless of whether you consider these sanctions to be good sanctions, it's undermining the value of dollars because they can be snagged from you.
Yeah, exactly. And I think what Nick is saying here is just, let's all just acknowledge the trade-off here. It might still be the right thing to do. It might still be the thing you want to do, the thing you feel like you should do. But let's acknowledge the trade-off is the US's reserve currency status, because what are other countries going to want to hold now that they realize the Western financial apparatus can just like freeze their dollars on a whim? Is it going to be dollars? Is it going to be USDC? Or are they going to look to alternatives? And I think the answer is pretty obvious. They're going to look to alternatives. So cause and effect, right? There is going to be a reaction to this sort of thing. It's not, there's no free lunch in the sanctions world.
Yeah, that's exactly right.
All right, so let's get to this, David. What are you excited about this week?
I mean, listeners already know, like, I don't see a lot to be excited about. Like,
What?
I mean, we can talk about the usuals. We can talk about the merge, blah, 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 blah. There was, at the beginning of this bull market, I put a line into a Market Monday that stuck in my head where the bull markets are when society comes and they remember crypto's a thing, and then they reprice everything, and then some people stick around, but most people leave, and then the bear market happens again. That's what I'm seeing. I'm seeing the attention leaving the space, people caring less about NFTs. These JPEGs are no longer interesting. They're just JPEGs now. DeFi tokens never really got traction again post DeFi summer. Alternative L1s are like falling through the floor. Meanwhile, like the only real attention that crypto has on it right now is with sanctions and regulation, which are not exciting. Like crypto bull markets happen during exciting times. And like, what is there to be excited about? I'm excited about the merge. I'm excited about layer 2s, but like those things don't scale out in the same way that NFTs did with culture and like social dynamics. And so like, I'm looking at the horizon being like, what left does the crypto industry have in its quiver? How many arrows does it have left in its crypto quiver to get people excited about it? And I'm just not seeing very many.
Do you think we're entering at the least like maybe a quiet period? If it's not a bearish period, it's definitely going to be another B, which is a building period of time.
Damn it! I was going to say that. Yeah, we're entering the quiet building periods, which I mean, kind of are loosely synonymous with bear markets, because it's easier to build during bear markets. But like, I just see all of the same things that we saw post 2018, like in the 2022 version.
There you go, guys. That's David's take. Tune in next week to see whether we get bull market David back or whether it's going to be not bearish David, builder David. That's the
or
B we're looking
ETH price
forward
goes
to.
past like $3,000 and I'm just like I'm bullish again. Like I was totally wrong.
The super cycle's right.
Super cycle. All right, Ryan, what are you excited about?
I'm excited about the executive order just because it's not super dumb. I thought it would be super dumb. Like, to be honest, I thought that they would screw it up. It's reasonably measured. It's keeping America in the game, and I care about that because, look, I live in the U.S. and I have hopes for the U.S. To preserve, some, to reject state surveillance, to reject the half-assed authoritarianism that's been trending towards in recent years, to do something that a lot of other countries around the world aren't doing. Look, I mean, the U.S. shouldn't try to compete with countries on authoritarianism. That's a bad path. It's never going to win. It's just not authoritarian enough to actually do a good job at it, right? So what is the path for the U.S.?
An hilarious take.
I mean, it's true. It's just like, it's just going to do a half-assed job. Right. So why do that? Why not double down on your core competency and the founding narrative of the country, which is like freedom, right? That's the true narrative that a lot of people in the U.S. can actually get behind. Strong property rights, freedom, civil liberties. These are the things that the Constitution embodied, and the things I would argue that made the U.S. actually a country worth living in and worth immigrating to. And I think it can still preserve these things if it does things like embrace crypto technology. I just saw a glimmer of hope this week in the executive order that not that they were going to embrace it, but at least they weren't going to quash it all in one fell swoop. So that's what's exciting to me this week. And I never thought I'd be saying a executive order is an exciting thing for crypto, but hey, that's what we're working with during the B market. We'll take anything we can get.
It's a complete inversion right now. NFTs are lame. DeFi's dead. But hey,
Biden's
regulation,
cool, though.
super sick.
Yeah, super sick regulation. All right, guys, that's it. That's the take of the week. Let's get to the last thing, David, which is, so what's the meme of the week this week?
The meme of the week is just watching a video of people watching the Shell gas price just click upwards. $4.07, $4.08. You can watch it go up in real time.
How depressing is that?
People just have their hands on their hips, just literally like watching gas go up in price.
That's crazy. It's sad. Yeah, gas prices are insane this week, but
not
I don't know.
Because it's a bear market.
There you go. Guys, sorry for all the B market top, but we got to say what's on our mind in the roll-ups. That's what we do every week. But of course, None of this has been financial advice. We don't know what type of B market it is. That's for you to make the decision. But we do know that Bitcoin is risky, ETH is risky, DeFi is risky. We've been telling you all along, you could lose what you put in.
They're less risky in bear markets.
But we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.